Welcome to another one of our EIA calls. Today we've got Manip Nona talking about PPC as usual. So without further ado, over to you, Manip.
Thanks, Vaughan. Good morning, everyone. We are still currently reliant on PPC's year-end results for the period ending the 31st of March 2024, in which I've seen that there still currently remains an oversupply of cement in South Africa as well as Botswana, and most of these entrants that are coming to the market are from Pakistan, Vietnam as well as China, in which Durban actually accounts for more than 80% of those imports, in which the balance is split between Cape Town as well as Port Elizabeth. Then essentially the International Trade Administration Commission imposed an anti-dumping penalty on Lucky Cement from Pakistan in 2015. After that, the expiry of that, Pakistan re-emerged and quite significant volumes came from them. Then just touching on the financial year results, South Africa and Botswana, they had an increase of 5.2% in the revenue. They achieved this by an biannual increase of 9.7%, in which in the comparative period it was 8%, so that's a 1.7% increase. Then on PPC Zimbabwe, they achieved a 90.9% increase. This is due to these numbers are coming from a low base, as in the comparative period they had a maintenance shutdown. Then on the material business, there was a decrease about 6%, in which the flyers business was the only one that done quite well. In what we expect from a revenue and EBITDA perspective, we see a strong recovery coming from about 14 to about 18%. Also, most recently, PPC has made several new executive changes, so they definitely are meeting those long-term goals within the business. And on the return side of things, if you look at the 10-year track record of PPC, it's not performing, the greatest. I think once the government imposes import duties, these numbers should go up quite significantly. Then in terms of conclusion, the demand in South Africa and Botswana remains quite weak. In the construction sector, that region remains quite depressed. In the retail sector, there's quite a low demand as well as aggressive price competition. In Zimbabwe, there's strong demand in both residential as well as government construction. PPC has a strong balance sheet due to the sale of the Rwanda business, as well as they achieved a strong free cash flow of 260 million. We do have a hold and intrinsic value of 4 rand. And in terms of outlook, PPC will identify cost-saving drivers throughout the business, as well as rely on business intelligence to make better quality decisions. And hopefully in the future we can rely on government support to place import duties to allow an even playing field.